Hello, ladies and gentlemen, and welcome back. Today we discuss stocks, commodities, and cryptos, and we take a deeper dive into the idea of cycles throughout time. Everything looks pretty bad for the crypto market, and we do expect it to continue to fall further. But at the same time, stocks are starting to also show some signs of weakness. Will these all be connected together? Well, in 2022, that has been the general cause for alarm. Let's take a look now at how these markets are all connected and what's in store next for the big moves ahead. See you soon. Well, welcome back everybody to The Daily Show. We'll be discussing the news events, the key macro data, and the lead indicators into the key levels we should be watching right now. But I think the big story of the last 24 hours, of course, has been this Russian missile strike. Everyone on Twitter is talking about it. Obviously, it did worry markets initially, then they recovered, and now they're dropping again in the aftermarket. What are the bullish signs right now for markets? This is one of the things that we talk about, the high-level thought process. We've seen copper surging again. Now, copper, or Dr. Copper as it's well known, is kind of a barometer for the health of the world economy moving forward. If copper is rising, especially if it's started to increase quite a lot, we need to pay attention. Here are copper futures. Copper has increased 14% plus over the last 5 weeks. And when that's happened in the past, what has it meant? Well, it's meant that copper does continue to actually strengthen over time, and that often that can be coinciding with the bottoms of markets. If we think back over to 2008, when copper started to recover, that was a fantastic sign. When it recovered back in 2001, that was a fantastic sign. When it recovers off these pullbacks, it's usually been pretty good. Even in the 70s, when we had recovery, we saw that double dip in the main 70s, and then of course we did end up recovering. Copper does show us strength of the economy, whether that's good or bad. Now, the S&P 500 tends to follow. However, it can be shaky for the next 1 to 2 months, the kangaroo style market. When we see copper going well, does the S&P 500 follow? It tends to be correlating, you can see here in 2008, near the lows. Not the low, but near the lows. There was one last shakeout during this period. I'm hoping that that kind of occurs. It'll be in line with many other things we'll discuss in today's video. A 45 plus VIX would be fantastic as well, because that would mean that it's coinciding with normal conditions. We can be more sure the bottom may be in. Now, 80% of the time, 12 months later, after a reading like this, stocks have been up. There are a few data points. So again, it goes through that 70s period, through the previous stagflation areas, and it tends to do okay. So copper recovering is good. Seasonality, as we know in bear market years, this tends to be where we see that kangaroo to declining section of the market. That middle of November into the back end of November tends to be weak in these bear market years. And I want to just quickly remind everybody to follow along on Twitter as well. If you haven't been following at FX Evolution, I'm posting a whole bunch of charts, such as this one on crypto today. And I'll be posting a few big seasonality, big plays over the next coming months. And I think it's a good place to follow us along. Q3 earnings still shocking, 56%. It's a terrible earnings season by any barometer. We have Nvidia coming up, which will be probably one of the biggest news announcements over the next coming weeks. And that's the one that I'd be watching over the next 24 hours. We'll look at Nvidia a little bit later. So just before we jump into the charts and we take a look at the key levels that we need to be watching right now, I want to say a big thank you to the sponsor of today's video, which is Tiger Brokers. And Tiger Brokers have a great platform, whether it be on the mobile or of course the desktop version. But I'm taking a quick look here at the desktop, and I want to show you the fact that you can create your own trading windows. This allows you to then select quotations, clocks for different times in the world. We can select general trade, all of these different tabs, and they're constantly adding to this. Why does this matter? Well, it's nice to be able to customize your trading platform, and a lot of them don't let you do so. And it's big because, of course, level 1, level 2 data are both available through Tiger Brokers. That's a huge thing you want to be looking at. Live news feeds, a massive thing that's always worthwhile having. And then, of course, being able to set up your order windows, alarm clocks, all those types of things. I also like to have the options window open for stocks and to be able to see things like the IV percentile, the IV high and low. All of these things are very, very important. Implied volatility is a massive thing if you're trading options. But why I also wanted to bring this up was to set alerts. I mean, we are in a time of incredibly fast markets. Just remember, being able to set alerts for your stocks that you've been looking at when you do hard analysis, why not make it pay off for you? The way you do that, set alerts so you don't forget about it. I like to think of humans, we have the Cocoa Puff brains. That means we can't necessarily remember everything. We think we can, but how many times have you forgotten something that you remember? I'll remember that, and then you didn't remember it. Set the alerts, have a platform that does so. Now, one of the best things at the moment is that Tiger Brokers have a special offer for you guys, and we've partnered up with them to celebrate one of their awards they've run recently from CanStar, and we're giving away a month of free access to our private Discord community. If you're interested in opening an account, you can click on the links in the description down below. If you're in one of the countries that is available, you'll be able to get access by opening and funding an account with as little as 1 cent. That will give you 1 month of free live access to, of course, our Discord community, our private one there. You also get, on top of that, all of the other offers that they're offering you guys. So why not check it out? So let's now jump into the charts. Let's take a look at some of the key things that show us that maybe markets are starting to look towards the toppy side. The first one is, of course, AMC. AMC has jumped up several times over the last, let's say, year, and whenever it has jumped up, it's coincided with the FOMO or the froth in markets. Our dumb money, smart money chart as well, which we'll have in the next video, so make sure to subscribe to that, will also correlate quite nicely with this AMC idea. We're seeing AMC starting to rise. At the same time, we're seeing the stock market getting a little frothy after that CPI number. What about the VIX? Well, the VIX definitely jumped, most likely because of that missile news. That has, ramifications around the world, and we saw the volatility jump. It didn't really break any particular resistance or any particular area, so we can't get that much from that. We know we're in massive options expiration. We'll take a look at that later. Trillions of dollars at stake. But at the same time, the PCC is quite low now in the recent days of trade. What that's telling us is there are more calls being entered predominantly over the number of puts. This is a good sign if you're feeling bearish in these markets around these levels. You want this, you do not want this. Remember, if there's a lot of puts in the market tends to stall and end up finding buyers to squeeze those puts and make sure they don't expire worth anything. That's what's been occurring in recent subsequent weeks, but now we're starting to get back into that call territory. And if you have a look here, these levels often correlate with quite low amounts of calls. There's the correlation there. There's low amounts of calls. We're back in that zone again. So certainly one to watch there, the PCC. Indices plus, of course, stocks worthwhile checking. What about yields? They're doing absolutely nothing ahead of the news results this week. Core retail sales coming out. So we'll certainly check that out. We've talked about this so many times. If you want to see our opinion on yields, go back, watch any of the last 3 videos. They've been pretty similar. Let's have a look at the US dollar. What's happening there? Very interesting switch of change. So let's take a look at the daily here. We actually have got a massive rejection of the US dollar off this huge level of this 105 zone. It bounced and it's bounced huge. If this now breaks through that 107, and we'll just put the price here, 107.17 for anyone that's watching in the car. I do read your comments. I see a few people doing that. Then, it's looking towards the DXY long. Pullback should be met by buy demand. And we're probably looking towards dollar index long. And then, of course, weakness in the S&P 500. It hit the level. That's nice. I mean, that's exactly where we wanted the DXY to get to. We've obviously had 3 demand zones. This is the first time we've seen a strong reaction. And what we're looking for, as we mentioned before, 15-minute chart, 1-hour chart, whatever, we're looking for the market to make this new high. We need 107.18 to be taken. Once that gets taken and it breaks above there, then pullback should be met by buying demand. That's a very strong move on this market. At the moment, of course, sellers will be coming in here, and a lot of you will be saying, why wouldn't we just sell here? Yeah, it's relevant. There certainly is a sell there. The only thing is where you're going to take profit. Is it going to be back down in these lows? This is certainly the target. I don't hate the sell here. If you were in that, congrats, but I have a feeling based on what we're seeing through the rest of the market, there could really be that finalized strength. If this market does weaken though, we're looking for DXY strength about here, and obviously the US 500 to also be finding weakness at the same time. These two should synergize very well together. Let's have a look at the euro. The euro hit that little critical zone over here, previous daily close. It actually smacked it, came straight back off it. You'll notice I've got alerts set underneath now. That's the same thing as the DXY, 10263 kind of area. If we make a new low underneath that, that's going to be super significant. And you're probably looking at a change of trend towards the downside, pushing that 107 kind of parity level again for weakness. This has been a great move. We've certainly been on top of that. But at the moment, we are expecting maybe some potential dollar strength for now. we're so close to activating that dollar strength. Hopefully we can do so. US oil. Now, I do apologize. In the previous video, I actually should have called that bearish. I had a look at the smaller timeframes and I was like, oh, okay, it was bearish. The market did come back up to this level just recently and it's sold off. In general, oil is looking weaker. I mean, we did take the low here. We've pulled back, grabbing some liquidity. We've pulled back into this zone. If we breach to a new high, I'll move this alert down. Of course, that will be suddenly bullish. But at this stage, yes, you would have to think US oil is mostly looking towards the weakness side. It's come off these previous demands. It's made a new low. This could be a squeeze. So it could just be pushing back to here and then finding buyers. But either or, I would think that the market should weaken here on oil down to those types of levels, sitting around that kind of 85 a barrel for US oil. I'd like to see it weaken into that zone. Copper, similarly, want to see this weaken now. We did just talk about the stats to do with copper. Now, copper, when it tends to have these huge runs on it, can begin a very important time for the US economy and the world economy. Still, I expect copper to come back down to these levels and possibly test them to find out whether the strength is there. And this is in line with our gold discussion as well. Gold's coming back to one of the most traded zones of the last 2 years. This area in here, this red box kind of zone, is the most traded zone through the last 2 years. It's got huge amounts of orders in it, and we've had a massive run on gold. And it's not that I don't think gold stocks are good. I still think they're pretty good for the longer term or the medium to long term, but they've had an amazing run. It's probably due for a pullback. The spread of this idea is clearly happening. And you know why I know that? Because I loaded up some newspaper articles for this video and people are talking about gold. When we were discussing it 2 weeks ago, nobody wanted it. Now people suddenly want it. Oh, gold, gold, gold. Probably time to shake out a few investors, yeah? So it depends on your timing, but for people that have been in this bullishness, we're starting to see a dulling market. That is a series of higher highs, but not necessarily a super amount of strength. You don't usually want to short a dulling market. Initially, you want triggers. You'll notice I have an alert just set underneath here as the first signs of weakness. Anything underneath 1766 should trigger, I guess, a general sentiment of the sell-off. But this is a very tough area. For buyers, I've got these two rally-based kind of rally areas for supply, for demands, and they're the ones I'm looking for in terms of the market to come back to and see a reaction off them. We'll cover it, though, together here on the channel. We'll be looking at it. Don't worry, guys. We always check all these charts. We're probably one of the only ones on, I think, the internet on YouTube that does so many chartings. And that's because it's interesting to see how these markets connect, but it also gives you opportunity throughout all of them. So hopefully that interests a lot of you. XLY versus XLP, this shows us the American consumer versus the staples. Remember, 1/3 of the US economy is consumerism, 2/3 is services. So if we're not seeing the American consumer come back versus staples, then usually it's telling us that the market rally is false. Since the CPI number, it's been okay. We're seeing some strength. I want to see, though, if we get a pullback in the stocks that basically XLY, XLP holds up. That is, we see consumer discretionary holding better versus the staple side. If that's happening, it really proves more that we may be bottoming. At this stage, that's not exactly happening. US 30, so the old economy versus the new economy. We're taking the Dow versus the US 500. Since the CPI, the new economy is doing better. Makes sense. Valuations are going up rather than compressed. This is the type of thing that you do want to see. Let's find out if it can sustain. Let's get into the stocks now. So ahead of earnings, we see Nvidia, really nice recovery. I mean, people that have taken this trade from these lows, if you did that, congrats, 45% up. That's no joke. And it's a quality stock, as we do know. It finds itself into earnings, and clearly no one really had any opinion on it. I think it's in the middle of nowhere land. It's neither at a high, being the 180 kind of highs, nor is it at a low. So I think the risk is probably more to the downside here for Nvidia in recent weeks. That being said, it's a quality stock. I'm looking for it to get back down into these 140 zones. That was initially where I thought a turn could happen, but it's just powered on since then, especially this Buffett news and all the things that are going on. Definitely helps this. Facebook, the whole Meta situation where they're purchasing a lot of stuff, strong things. I would still expect, though, at some point in time to see Nvidia come back to the 142s, and then we'll find out whether the market really wishes to buy these in the middle of nowhere land ahead of the earnings. What about Tesla? It's still fairly weak. It was up 1.82% on the day, so strong against a weakness of the day, but I'd expect this to open up down through the next session. And what will happen with Tesla is I think a pressure will be had on the 180 unless we're really seeing a recovery. And if the market starts to come down, I wouldn't be surprised if this 180 gets tested. Now, if it double bottoms and then does something like that, that's going to be a really good sign for Tesla traders. If it does get underneath, though, be worried, guys, because there's nothing supporting it from a technical level. At that point, if the market's starting to get frizzled as well or going down, there's a gap down here at 136. There's a lot of structure through there. I could see some serious weakness. So I think setting alerts underneath is going to be something that you want to do. Just like we did in the example before with Tiger Brokers, that's the type of thing that you want to have. You want to have set alerts underneath. So even if you're not following the stock, you're aware of when it does hit these levels, and this is any stock, you are there for that opportunity because you don't want to miss the opportunities. You do a lot of hard work in front of the charts. You're watching this daily show. You're doing these things. Let's make it pay off. The way you do that, set alerts, be ready. Here's the DAX. Not necessarily a great sign. I mean, we've got a rejection week with the long leg doji. No decision made. That means that we don't have a new low being formed after this doji. But the market's effectively saying, hey, we're at equilibrium or we're at a fair value. And now what we're looking for is a new low to be formed. And if that does happen, you would think shorts will start to suffice. Maybe we go back down to a 3,600 or a 13,200. And these 13,600, 13,200 both represent previous good structure. Remember, strong move here, probably time for a little bit of a pullback. The US market's getting very, very close. And in fact, the NASDAQ hit one of our major targets in the last 24 hours. Here it is. The NASDAQ smashes through into that 12,000. Anyone that just shorted that probably doesn't have a sad face right now. You're probably pretty happy with yourselves. We've been talking about this one for a little while, this sneaky supply that sits here and sits behind, and the market just went bang straight into it. Literally just took this high and then it shorted off. I want to actually have a look together at just the smaller time frames here. Let's go to the 5-minute chart. Just have a look at how this happened. So here's the news. Just a big, huge pile in, then drops significantly, picks up, and then of course it's dropping again. So what's happened here is we've just swiped a little bit of that liquidity, and there's a little further protection behind here. So I thought 12,000 was a good target for buyers. I'm sure some people probably have committed to potentially selling positions there. Then it's rejected that area. The bears have started to come back in, but it's still not showing us the signs. It's like a dulling market. It's still going higher highs, higher lows, higher highs, higher lows. The NASDAQ's not actually the weakness. It's the US 500 that's starting to show weakness. Now, it still hasn't hit 4,100. Don't get me wrong. That's a zone that I've been looking at, that 4,120, and the reasoning is clear. Let's just have a quick look to refresh anyone that's a new viewer. Let's check that out. Downward trend line, we've used this a bit. Obviously, an unfilled gap in here as well. Very strong previous supply. A lot of things that we like about that. But as a bull, you may actually prefer this to occur. And the reason is because if it just smashes straight into here, is this all just part of some FOMO trap where then they dump it down similar to last time? What you probably prefer as a bull is a rejection, a fill into the gap where we had the inflation number, and then you can see whether it makes the decision. Does it then rally through, make a new? At that point, if it comes back up after this and starts doing this, very likely we're going to see a breakout. There's a lot of scenarios here, but yes, the S&P 500 has shown some signs of weakness. Now, in the previous video, we talked about options probably being the better play, and the reason why is because there's not that much structure on the left-hand side. If you notice here, we've got very little previous orders. We don't even know why it's realistically stopping here. You might say, well, it's simple. It's 4,000. Hey, yeah, it's a psychological, but there's not that many great reasons why it's stopping. Each time it's starting to dull though. So what that means is making higher highs, but it's not going up by much. Now, we did actually see it take a new low here, and you can see it's finding buyers around that 39.50. Let's go back over to the futures market because that gives us way more information. And you'll notice again, it makes a higher high, it makes a lower low, and it's come up. From this perspective, it should be weakening. If we get underneath this zone here, which is sitting around 39.40, you would have to think that rallies are met by sell demand. and the market could be moving back towards that maximum pain with the options. That's at least the general consensus here. This is a very tough market. It doesn't have all the hallmarks. I'm thinking it's like a 6 out of 10 style position because all of this is very trappy as well. Options, of course, save you from stop losses. It's a very tough CFD market at the moment, or futures market, because of the way it's making these highs, because of the way it's then crashing under the lows, and it's structuring for some big move. Which big move? Well, we'll hopefully find out over the next coming days. Let's have a look at the options. Let's explain the 18th. We'll refresh this right now. So we've almost got 5 million units. That's trillions of dollars expiring this week. Take a look at some of these strikes, though. The 400 strike has now become one of the biggest call strikes. In fact, it is. But there's still a ton of puts sitting at 390. Max Payne's moving up to 385. That's up from 382, I think. And we're starting to say, okay, well, even if we do go down, it's still better for this market to probably be between like 385, let's say, or 380 we'll go with, to 400 come Friday. That's where you'd want to be if you are a market maker based on the current options. All these guys, sad face for them, they've lost. Most likely, never say never, but these kind of put options, and it doesn't look like they're going to come in. Interesting, in the last 24 hours, though, we've seen 385 strikes become a little bit bigger on the call side, but we've seen a lot of puts entered in on the 390. So it could be a lot of nothing as we go through this week. This is the biggest options expiration of the month. It's a huge one, this November one. Everyone's going to be talking about it the next couple of days. They're not talking about it right now, but we need to be paying attention to it. You can see calls are coming back in. You can see that the best area for the market to close to make the most amount of money possible. Remember, who writes the options? The composite man. Wall Street writes the options. They're the ones that are always involved in this. Let's have a look now at Bitcoin. I drew this up. Now, it's an approximation on days. Don't yell at me too much in the comment section if you find it to be like 83.2% or something like that. I don't want to be exactly accurate, but what I want to point out was that each one of these crypto cycles has usually been kind of marred by some very negative thing. So, of course, the first one was Mt. Gox. I remember that well. Then we had some kind of like China ban, a bunch of other scammy things happening during this 14-15. I remember the China ban was a big story, though. Then, of course, you have BitConnect kind of kicking off the disaster that happened in the crypto winter of 2017-18 into 19. And then we have Luna and, of course, FTX so far, creating, more scandals and scandalous things going on in the crypto world. Now, why I want to bring this up is because when we think about it, there were returns, or there were periods of time where the market has dropped before. Now, you've heard me probably say 11.5 and 9.5. These are my two favorite kind of zones because they're based on these percentages. Returns, previous drawdowns have pushed us into those types of things. Now, the first one was negative 94. I don't think that's going to happen. That was when it was very fledgling. These two, those seem to have very decent similarities with them. And actually, I know there's a low here, but if you take this to this, which is pretty much where the low was, and it just came down, spiked at once and went off, that's only about 400 and something days. So you've heard me probably mention, I believe the market should technically bottom before Feb 23. It's based on taking the low here, the low from this move, and of course where we are right now, and saying, well, if we take it on average, let's say it's a year and a bit, a year and 3 months, we'll go with that. And if that does happen, then it pushes us into this idea that we should see a bottoming. We should usually see some kind of further negativity. And a lot of people are starting to write, well, this FTX thing is great for crypto. I'm seeing a lot of articles saying that. I don't see how it's great for crypto, but at least the cat's out of the bag. That is that the negativity is starting to flow. No doubt where there's one, there's more. We're already starting to see that. And I think it will still have legs in terms of how many disasters end up coming. You can't tell me that there's not lots of systemic risks throughout that we haven't even heard of yet that are happening in the back end of the crypto space. So I'm not lost on how it comes back. I just think it's interesting to see these days. It's interesting to think about the markets as a giant cycle, and that this is how you also need to think about the stock market if you're an investor. Now, it's not going to help you as a day trader, but it's certainly going to help you potentially as an investor. We'll get back to the Bitcoin chart in just a second, but of course the news that's coming out, core retail sales on Wednesday, that's 8:30 a.m. New York time, big core retail sales. That's going to be a big one. Then we have the Philly Fed Manufacturing Index on Thursday, November the 17th, again, 8:30 a.m. New York time. And that's all going to probably, go together to really solidify whether this market's going down. Let's now have a look at Bitcoin. This is the barometer really of the market. Let's have a look at how it's been finding itself. I don't see any good signs for crypto yet. You'll notice that it made that initial kind of fearful low. We then rallied, which is pretty standard. We are now moving down. Usually if crypto is going to base, it might take a low and then spike it and move above. At that point, you can say, okay, this is more likely to be a base, Wyckoff style, I guess, in that case. And we're not seeing that. We're just having a bunch of movements up to this level and a bunch of selling. So crypto is still very shaky. I'm not seeing the signs of recovery yet. If you are, good work. Maybe you know more than I do about this, but yeah, it just looks like it's in the middle of nowhere land. And if we go back to the previous kind of bullish move up, there's not much holding it around here. The real structure begins, funnily enough, around that 83% to 86% decline. That's where we're getting that nice structure from previous action. This is questionable at the best. So yeah, this is what we're thinking about. And we obviously want to be following the trend as much as possible. So with shorts, you're looking for rallies to be met by sell demand. At this point, I think people will be willing to take profits in crypto should markets come up. 18,000 is probably a notable one. And just behind that 18,400 I've got here, I'm going to set an alert for those after the stream just to see what happens around those areas. Very important. If you enjoyed today's video, please remember to subscribe, smash that like button, and we'll see you in the next one. And do also remember that there's a special offer for, of course, members of the FX Evolution community. If you're interested in joining Tiger Brokers, click on the links down in the description below. We're giving away 1 free month of our private Discord community if you sign up at the moment. All the links should work, and then you can just contact Tiger Brokers, and they'll should be sending through, based on those links, the access for that 1 free month. You also get a bunch of free stocks from different places. And of course, at the moment, Australians and New Zealanders also get those 40 zip stocks. Thanks so much. We'll see you in the next one.